Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here on Wednesday, March 30th, 2022 with the Forex market analysis for you. We're going to see what's going on in the major currency crosses. Before we do that, we want to remind you with our disclaimer that this webinar is for illustrative and educational purposes only. And if you have not done so already, please subscribe to our Forex Trading Unlocked YouTube channel or our Twitch channel, whichever you prefer, or both. And pass it on to your friends by liking and sharing, if you wouldn't mind. And also check out the book, High Probable Japanese Candlestick Patterns, written by yours truly, available on Amazon.com in paperback and Kindle versions. Alright, now let's get to our live action screen. We have forex-trading-unlock.com already pulled up. And, excuse me, we have our workstation already pulled up as well. Let's take a look at what's going on with the euro. So the euro has definitely made a run at resistance over the past few sessions, bouncing nicely since Wednesday. It has finally hit our 111.60 price target off of this major swing low. Remember that we are viewing this as a corrective rally. So very important that you are mindful of this, that this is a corrective rally, okay? We have no reason to think that there is a bullish turn of events that's reversing this market at all whatsoever. All right, not that it's not going to happen, but right now it is not happening, okay? It is just going to be viewed as a correction, okay? All right, so with that being said, you can see that we have an upper boundary of 112.32 also that we are looking at right around here. Originally, we were looking for a good to hit into this area and then stall, and we still think that it probably will stall. You can see that the dollar index is retreating a bit over the past few sessions. And then it's due in part mostly because of the euro and the pound, but now all the rest of the currencies today especially are hitting the dollar a little bit. Before you get all bearish on USD, just remember that we are coming off of higher move highs. The trend there is higher. That means it is a bull that is viewed as a correction as well. There's some interesting things that have occurred so far this week that you're not listening to, but not getting from CNBC and stuff, which is shocking to me. And even some of the other Forex pundits out there. Bank of Japan and the Japanese government on Monday came out and said that they are going to raise rates and defend their currency should it get to 130. This will impact even the yen or the euro and the pound and a bunch of other ones as we get through these markets. Okay, so let's continue to check out what is going on here. So, as we said, right now we are trading here at 111.59, and this market is set to continue to put a little pressure on resistance. Now, is it going to fail? Well, remember that we do have these lows here, and this was a bottom of a range. Right here, we had a swing low here. A lot of support here. Where support is, it typically becomes resistance. You remember we kind of made these inching higher move highs, but barely piercing through resistance and then consolidating back. So does that mean we're going to pull back? Well, it's very likely, but I think first you have to wait a little bit. Right now, oil is consolidating and interest rates in the U.S. are stabilizing. So when you start to see them sell off, meaning rates go up, market rate goes up, then you will see pressure on the euro-U.S. dollar as dollar strength comes back. Excuse me. So right now we are viewing this all as a right now short-term correction for the U.S. dollar, okay? So for your euro bulls, I think we have a little bit of room to the upside, but I would use cautious trying to buy into new highs here right now. Until we have more of a settling of the conflict, what's going on between Russia and the Ukraine, it is very doubtful that you're going to see very much stability as far as strength comes in with the euro. So I think, once again, this confirms our outlook. However, we will see if it starts to rally through these levels and settle above it. If we get a settlement above 112.65, I would say that sets us up to hang in this little chop area where we were for months leading up into this conflict. I do not see any reason in the world why we would get above this area and challenge this 114.96, 115 even area anytime remotely soon. Okay, so thank you for the likes. We got a couple likes on YouTube already. We got some viewers on YouTube and Twitch. Remember, if you got any questions, just jump in on the chat and we will get to it as we get through this webinar. All right, let's take a look at the British pound US dollar. So we had this buy signal at the beginning of the month. Fell just short of our upside target. We had this sell signal that came into its already target, and now we are bottoming. And irony of it is today, if we settle where we're settling, where the market is right now, right here, that would be a short-term buy signal. Now remember, any upside movement right now and momentum for the pound US dollar is viewed as a correction. Overall, in longer term, it's been in a bear, but a grinding bear, not selling off as strong as the euro because it has no reason to collapse and fall down as strong as the euro does. Okay, so as far as if you are a aggressive bull right now, I would not jump in front of this signal because it's not confirmed until the close of today. However, even still, if you are long against the swing low from yesterday, minus a couple more pips of room, I think that's a pretty fair trade to the long side to look for a run at higher move highs and challenge this upside target area. Remember that we are coming off on a major swing low, a lower move high, and yesterday did we confirm a higher move high, a higher move low, which would put us in neutral to higher. We'll see. Definitely a positive close today with follow through over the next couple sessions. Well, there you go. That would confirm the buy signal. It would also confirm a higher move low and the neutrality of the pound US dollar. Remember that the Ukrainian-Russian influence is not hitting the pound like it is the euro, as well as the oil trade. It neutralizes between the pound and the US dollar for the most part, and interest rate is only a slight variable, and that's why the dollar does have somewhat longer term strength, at least right now, against the British pound US dollar. Okay, so be mindful of those things. It's very important. Okay, so and then another thing to be watching out for is definitely some of the economic numbers over the next couple of weeks. The UK economy, not that it's fledgling, but it's having some troubles, but not as much as the EU economy. And especially we got to remember that it's not just a war and us putting sanctions on Russia or the Europeans putting sanctions on Russia. The factories in Germany especially and many of the EU countries, they produce goods and services that flow into the Russian Federation. So they don't go elsewhere. They're not going to go elsewhere either. So that's going to put a damper on the economies and the economic numbers of the EU and as well as the UK moving forward. I don't think you're going to see it really hit so much over the next couple of weeks, but it will start to hit once we get into May and June. And that's saying that even if we have a ceasefire and a pullback and whatever, that we will still see the impact of what's going on right now in the short run. Should we still be at some level of conflict into May and June, well then you definitely will see your economic numbers start to have an impact on the euro and the pound, especially the euro. So I would watch for divergence there. I think you're going to have a lot of trades, especially like, let's take a look at the British pound euro real quick. GBP euro. See how that's tanking right there? That's what I'm saying, folks. You can tell that from the strength that there is more strength in the pound versus the dollar, and there definitely isn't in the euro. So now with the pound up, and even though the euro is up too, what is stronger here? It is the pound versus the euro. Remember, I always say other markets are the best indicators of what is going on in any other market. Okay, so that confirms where we have strength and where we have weakness. So any of your euro crosses versus many of your majors, especially something like the British pound US dollar, that doesn't have any energy woes. After all, you got to remember the UK is one of the biggest producers of oil globally, so that is not an issue for them. And believe me, before they just start donating to the world like we are and cut their production, which they are not doing like we are doing here, they will not supply anywhere else in the world. Make sure that they are taken care of first and then sell to the world. So just remember that only the United States does things like hurt its own economy to help its enemies and sometimes somewhat allies. So we'll see how that goes, but we know the supply chain issues for sure will be getting disrupted more and more as we head into spring. So the price of crude, most likely, if this conflict does not get resolved within the next couple of months, it's not unlikely that we will see crude not just at 150 but pushing 175. We could even get up to $200 a barrel by the end of the year if this conflict does not end. And it has to end on so many levels because it's not just supply chains that it's messing up with. It's going to impact the global food supply in a very, very big way because the carryover that we have of stocks in the U.S. is definitely at lows. And as much as we donate them, we're going to be hurting our own people. And there's no way we can supply the world. It's just not going to happen. It's not feasible. So anything we give to begin with is just a Band-Aid on a very big laceration that needs stitches and not a Band-Aid. So Hopefully these things don't go that way, but we have to be mindful because we can trade and make money off that, that's for sure. So especially because this is what people voted for in America, so we'll just have to go with this for another 2.5 years, right? So British pound, US dollar, you got your upside potential. Now should we fail from yesterday's swing low, then all bets are off, because then we will be leaning on this 129.98, basically 130 area. If we fell from there, well, obviously dollar strength is back in action. What would precipitate such a move like this? Well, once again, I don't think it's going to be oil, but if you see a big sell-off in the 30-year Treasury bond and the 10-year notes, it's likely that you'll see the British pound, US dollar start to fall on support. This would also be if you see a pullback in many of the other currencies versus the dollar, meaning that there's some fundamental issue that's driving flight to quality, then I would say that that would also put pressure on the pound US dollar. However, right now we have a short-term buy signal forming. Remember, keyword forming, guys out there and ladies. I don't want you jumping ahead of a trade, okay? We said forming means until the end of the close today. If this market was to settle like it is now, this would confirm a short-term buy signal, which would have us targeting at least up above this 131.95 area and trading above here. This is where we had support right here. And now the question is it going to be resistance, or is it a key pivot that will get us back up towards this bigger area of range? Now remember, if you look at it on the course of the year, all we've done really is we're pretty much close to where we started out, or where we started out December, excuse me. So when we go 4 months back, our trading has not really changed very much. We set an upper end of the range, a lower end of the range, and we're approaching to come right back towards the middle. Remember that the fundamentals lie a little bit stronger with the pound than they do with the euro. US dollar Swiss, baby, here's some action for you. Oh no, by the way, for compliance sakes, I am long currently the euro US dollar and the British pound US dollar, because today, if it ends, like I said, that confirms a buy signal, but yesterday was already a short-term pause and trend, short weak buy signal, so I already got long the pound yesterday. My stops are tight. I got long the euro US dollar as well as shorted the US dollar Swiss as well yesterday. So this already came through my price targets. The question is are we going to find support now or not? I think we will, somewhere around this upward sloping support line right here. If you look at it, the Swiss has been in a big range trade, and right now if the dollar is just in a correction, then this US dollar Swiss should be in a correction as well. I think this is a little bit overzealous. I'm very thankful it hit through our price targets. I just lowered my stop on my shorts, so no matter what, I can't lose on these, which is nice. But I am not looking to be bearish this one for very long, even if the dollar goes into a retreat. Just because right now, currently, the euro, because of the conflict with the Ukraine and Russia, as well as Switzerland, because they did the first thing, they did something they've never done a couple weeks ago, and that is get rid. They are no longer neutral as a bank. They decided to put sanctions on Russia and blah blah blah, do all kinds of things with when it comes to bank accounts for Russians and what have you, and Russian companies, which is something that no matter in World War I and World War II, Communist Revolution, Korean War, you name it, Vietnam, Iraq, blah, 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 any conflict for past couple hundred years, the Swiss have stayed completely neutral and have not been part of any sides, picking a side or having anything to, as far as when it came to banking, they were banking with everybody. So, and that's just something that it is not necessarily a good thing or a bad thing, and there's all kinds of perspectives, but that is what they were known for. Now they are not. That means that the Swiss franc is no longer a flight to quality currency. It is no longer has the weight that it did, especially because it did have stronger weight than the euro, and now it's starting to wane. So we'll see how that comes out of it. But I do believe that in the longer term, the Swiss really screwed themselves, and now they're going to have to support their currency more than having the globe look to do it for them. So, but that's just how it goes. Let's see if we have any questions here on YouTube or Twitch. We don't have any on Twitch. Let's go to YouTube. Thank you for the like. We appreciate that. Got a couple viewers. All right, that's nice. All right, thanks for hanging out with us today, guys. We're going to keep on going here since we don't have any questions. Now, remember, also, we have this dividing line here. Okay, this is something where, remember, I always tell you, if you watch my videos, markets tend to go out like they come in. So we had this extreme velocity up here. We had our nice 1 and 2 day sell signal here that has now hit our downside targets. The momentum of this slide is very similar in velocity as this one that brought it up to this area. So I would expect that now that we've done this, that over the next couple of days we'll probably consolidate and stay. Not that we won't make a lower move low on the day, but I would start to think that we would find some support somewhere along this upward sloping support line. So we'll see how that goes. Right now we don't have a signal. Once again, I am short the US dollar Swiss from excuse me, let me put this out on the other screen. Okay, so let's see, US dollar Swiss, just to let you know for transparency. Yeah, I am short from 92, that's a stop loss. I'm from 93.31. I have a stop in now at 92.85, which is obviously a protective stop as well as a profit stop. And as far as the euro US dollar, I am long that one from 111.17 with a 111.19 stop loss. It's tight. There's still a lot of room. The market's at 111.57 right now. So we'll see. Now those are corrective trades. That's why I have my stops already in on short-term swing trades. I didn't have any solid buy signal. However, I may have one today, once again from the pound US dollar. We'll see. That would support my trade there. But the Swiss, that was a short-term sell signal that I added to, and now I actually am looking to probably get out of this one, or definitely lower the stop down some more after the close of today's trading. All right, so let's go to the US dollar JPY. So for all of you that follow me, you know that I have been long this thing for months, and boy did I take heat for the since November up until, let's see, from basically the middle of October all the way up until the beginning of March. This thing has been slowly grinding higher, barely breaching resistance, then falling back, and I've been long from here, and I got long here, and then I got long up here, so I took heat on this for a while. Well, guess what? The last couple weeks have been good to me. Now, markets tend to go out like they come in. We've been calling for a potential correction here since Monday, and not because of any necessary signal, because on Monday we spiked higher. We had an incredible range here. We pulled back pretty far from the high, and the reason why, I don't know if any of you are aware of this, but you need to be aware of this. If you watch my videos, you hear me all the time talking about interest rates. That's because interest rates are part of the pricing for all currencies, depending on which cross and which interest rate you're talking about. So the Bank of Japan, which doesn't say very much, let alone the Japanese government, when it talks about supporting their currency, they came out on Monday. This is very key for all of you that are listening right now. On Monday, the Bank of Japan said that they will support their currency, that right now it is devaluing so much against so many other currencies, especially the dollar, that they need to put the brakes on. They put a line in the sand. They said 130 is it. Now, when they say 130, they're not going to be mamby-pamby like the U.S. Fed and all the other ones around the globe. They are going to be, it's going to be like, excuse me, it's going to be like Pearl Harbor. They're going to come in, doesn't matter what day of the week it is, what time of day it is. If that market touches 130, they are going to raise rates. And they will also be doing some other things as far as the government said that they will throw in to help support their currency. Now, if you think that the Japanese are only going to raise, now they haven't raised the rates, and I don't even know how long, let alone talked about doing such a thing, and especially putting a line in the sand. But it's understandable with what's going on here. Unlike our Fed and many other central banks and government, the Japanese are not going to mess around, especially when you've seen a rally like this over the past couple of weeks where the yen was depreciating versus the dollar, but at a decent rate where they wouldn't even be talking about what they're talking about now probably for another 3 to 6 months, but this velocity of this rally has sparked this. So what does that mean? That means that absolutely the day and second that it hits 130, they are going to come and raise rates. I don't think they're going to do a quarter. I would be surprised if they only do a half a point. I think for sure that it would be minimal of a half a point, but I wouldn't doubt that they go for 3/4 to 1% in one shot right away, no matter what time of day it is. It's just a matter of when it hits that price. You heard it here first, folks. I've been talking about it for the past few days. I even said it on tfnn.com on my weekly Wednesdays time slot. You can double check it if you want. This is serious. I've been long for months. On Monday, I reversed just above this close on Monday, and some above it and some a little bit below it, and I got short as well. So now I am short, and this is for transparency's sake, because if you've been watching my videos, I just gotta tell you that this is the first time that I've shorted the yen. I've gotten out of longs, taken profits, and bought dips back in, but I haven't shorted in a while. And I am short from 121.53 down to 121.49. Okay, so as you can see right now, I am taking a little heat. Those are the fresher trades. I also have a couple up here at the 123.10 area. So am I going to hold these on for forever? No, absolutely not. I'm looking for a retracement down towards this 119.79 to 118 area. Do I think it's going to get there? I think it's going to be a little rough. However, with oil going sideways, and if we see another slide in oil over the next couple of days, which you can see here was yesterday's trading, and today it's trading right around 108, 107 something. It's up a couple bucks on the day. And then we have the 30-year note as well, which right now is pretty much going sideways. In fact, actually now it's up on the day, if I remember right, which we're settled up on the day. So this is in reprieve. Bond prices are going up. That means that interest rates are going down as far as the market is concerned. That means weakness in the dollar. And coupled with the weakness or the sideways trading in the oil, I think you're seeing not just profit taking, but because of the speak from the Bank of Japan and the Japanese government, that's why you have this current sell-off. Now, it's not going to break this market and set a bear trend, but it means that right now we're going to have a really tough spot. We're going to grind higher. We've already had a big velocity. Now it's time to correct, consolidate into a range, and probably slowly grind higher. And once again, as we get back towards this 125, 126, I guarantee you they are going to start. They're not going to. They may not even say anything at all anymore. I mean, you can look it up. They did say this is, but they're not. They're not like, they don't get out there and market. They already said it. It's just a matter of if it happens, they will do it. And remember, the Japanese, like the Swiss, they will do the right thing, and they're not going to prolong it. They're not going to put a Band-Aid on a big laceration that needs to be stitched up or needs surgery. Okay, they're going to do the surgery right away, even though you have to take the pain, and it's going to be a little rough because you don't have any anesthetic. But guess what? You're going to heal up and be better really quickly, versus doing what we're doing, which is actually destroying the economy. Like, to tell you the truth, we should have raised rates already a few years ago, 3-4 years ago, and been holding them up already a couple percent above where they're at right now, because then we would have had room to cut right now. I know the Fed's telling you that they need to raise rates to curb inflation. That would be true in a deflationary environment and if you had an overheating economy, not when you have what we have coming out of a lockdown, supply chain issues, rampant inflation. This will only couple inflation and cause more strife and tension. So I've been saying this for months. It's already been happening. So it's no longer a theory or whatever that I had put out there. It will continue. It will not stop for the next 2.5 years, at least until this fall, until we have a shakeup and see what happens geopolitically in this world as well as in this country as well. So, so that'll be mindful of that. Right now, we're looking for the sell target. Now, if you are trying to buy this market, I would wait till it gets down lower or wait for a valid buy signal. Okay, now if you are short, I would be mindful of the high from yesterday. Anything above 124.30 has this market back on the edge, piercing through, playing with resistance and trying to flirt with higher move highs. Now, I had initially a 140 price target, but that wasn't for months, because we blew through my 117 target that I thought we would be hitting right about the end of last week into this week on a timing basis, not hitting 122 until probably somewhere towards the end of April, beginning of May, which we've obviously blown through. We went all the way up to 125.12. So we're only $5 away from their line in the sand and $15 away from my long-term target that I'm not even looking for a while. And for you to think that we can't do $15 in a short amount of time, well, just remember, in the beginning of March, we were trading down at 114.70, and we got all the way up to 125.12. Okay, so it can happen. It can happen very quickly. So real quick, before I switch markets, just want to check and see. No questions. Thanks again for that extra like on YouTube. All right, guys, we're going to keep on moving along. We don't want to bore you with anything. You got that down. Australian dollar, US dollar. I have a short-term long going on right now. I am risking the low of yesterday. I do believe that this market is set up for a correction. I have a corrective area right here. However, because of the pulling back in the interest rates and a couple other factors, I think that there's a good chance that my hourly trade is going to poke through resistance. I'm only looking to get this market up to about 75, 75. make a short-term little swing trade and take some profits. I am bullish to Australian dollar, US dollar overall in the intermediate and longer term, but I do think you're going to have to see a little bit of a correction, just like you saw here, a new higher move high, set a higher move low. We've made a higher move high, now we're kind of fledgling. We'll see if we spark a higher move high or if we pull back and make a higher move low. We have this nice upward sloping support line holding the trend intact that would come right in line with our buying downside target area, consolidate here, bounce off this, and then make another nice run through resistance. So you know where our buying area is. It's definitely around 73.56, 73.09, and any type of longs here are guaranteed. If you get below 73.09 and you're long, you're probably on the wrong side or you're taking a lot of heat. I would be very cautious buying down and not having a good stop area somewhere in here if you look to buy down here, which is what I'm looking to do. Is if I get stopped out of this one, or if it goes up, I will be waiting for a correction, a big swing before I buy in it again. Try and get a buy signal like we had here, or this one over here. That's what I'm looking for to manifest. So we'll see if that does occur or not, but eventually it will. So it's just a matter of time. Right now, as far as the Asian currencies, Australia is coming out of the lockdowns pretty firmly and has a lot of demand coming out of China. They are in tandem with the New Zealand dollar, and as we get into this one, the one thing you got to be mindful of is New Zealand dollar is not as strong as the Australian dollar. It did make a higher move high today, but however, they're not coming out of their lockdowns as quickly as Australia is. So we did make a higher move high. We just after making a higher move low, so I would key off of the low from yesterday. As long as we stay above here, we are neutral to higher, but I think we're just going to poke through resistance. I'm not looking for, like, even though, look at this last swing high, big correction, then we had a big rally, but the rally, because it was such a big correction, just pierced through, made some new highs, pulled back, and then made a higher move low. We'll see. But otherwise, this upward sloping support line, very similar to the Australian dollar, I think is where you have a good area to fall back and correct on. So we'll see what happens here. Overall, I am bullish, but in a bullish grind, meaning that we are not going to explode to the upside, where even if the Australia takes off in a big way and the dollar is getting hammered, I don't think the New Zealand dollar is going to explode in that capacity. All right, so I do not have a position on in the US dollar, New Zealand dollar, by the way. US dollar Canada, I am short right now. I am short from just above, right just above the close of yesterday. So I'm only up a few pips on this one right here. So with the risk of the high of yesterday. So this is a short-term laying on support trade, selling into lows. It was good earlier. We made a lower move low, and this is significant in the sense that we did poke a lower move low after a lower move high. The overall trend is neutral to lower. You can see that we're making lower move lows and lower move highs. There is a big swing trade here, so I would use caution buying this market. That is for sure. I would look for rallies to sell. If you're short right now, key off of the high from a couple days ago, basically where the swing low was here, around 125.86. Trading below here keeps this market suppressed and looking for lower move lows. I believe that especially if we can compress this or press this sell-off in the dollar for at least another session or so, that would be a good way for us to get down to this 124, maybe 123.75 area, find some support, and then chop around and set a little bit of a range. But overall, today's lower move low is a good indication, especially if we get follow through over the next couple sessions, that this market is doomed and ready to go back and cram through support. Is it going to be slamming support? Probably not, but I do see it as trending lower and something you can take advantage of. Bitcoin's had a nice little rally. We're going to talk about a couple cryptos real quick. I think this has been following the Ethereum rally more than anything else. Of course, we heard there was a big crypto scam for, what is it, over $600 million. But then there was also, I think Elon Musk, but didn't he buy like another $500,000 or $500 million worth of Bitcoin or something? I don't know. It was some number he threw out too the other day within the last couple days. So I think that you have a little support from those things. But overall, I do believe that this is chasing the Ethereum rally. I'm looking for a pullback. I don't think that this rally is sustainable. It has a pretty steep slope. Obviously, it's trending higher, making higher move highs and higher move lows. But I do believe that it is worn out. We had this nice buy signal back down here. We had another one right here. We don't have a sell signal right now. However, I do think that this market is running out of steam. All right, let's look at ETHUSD. All right, we have no questions on Twitch. Let's double check on YouTube. All right, no, none there too. Okay, you guys are quiet, but that's all right. All right, so Ethereum, we talked about this yesterday. It poked a higher move high. It hit some key resistance here. We still think that it has a chance if this momentum holds. If we have a little consolidation, we may spike up higher towards this 37.85. I think that's the extreme. Once again, I think that Bitcoin is chasing this one. I think that this is definitely a nice little rally. Obviously, we have a short-term bullish trend, but I think it's just extending the overall longer-term trend that is down, and this is just a correction to the upside. And if you really look at it, the whole year so far, we can go back to the first week of January. We're finally trading back up to prices that we were trading down from. Okay, and if you look at it as from then on, this has been the upper barrier for the range pretty much. So for us to spike up a little bit higher, remember here's these lows here that would put right into this area here where you had support, it becomes resistance. Perfect way for us to see that this market will go like this, trade a little higher and then go down, and we'll see where it goes from there. So that's something you want to be mindful of. As far as the crypto space is concerned, let's go back to the Euro US dollar. This one here is pretty much unchanged. I think most of the market action that we've seen for today is done. Let's wait and see how we close. Remember, the interest rate markets have already closed in the US, so now we're going to see what happens with the stock market, as it still has another 25 minutes left. After that's done, once we roll out and start Thursday's trading and we get into the Asian trade, this is key. Let's see what Japan does when it comes to their trading tonight, meaning their morning. So, and remember, they're going to be open around 6, 7 o'clock, 8 o'clock, depending on where you are in the U.S., and see what they happen, because the yen has been getting buried by most currencies. At the very least, it's in the beginning of a corrective phase, and I don't think it's just a 2-day move. I think you really have a good chance of riding support in the yen, or the U.S. dollar yen rather, over the next couple sessions at least until Friday going into the weekend. Now, should we get a big rally in oil and a big sell-off in the interest rates, that would negate this theory, and then we would probably see the bulls come back. So be very cautious. Like right now, I'm right in the middle of a trade. I'm up on a couple contracts, I'm down on a couple contracts, I'm right in the middle, but I have a stop back above where my initial trades are, and if it gets there, I'm not going to be short. I'm not getting caught with my pants down on this one. I've been long for months. Picked it off kind of nicely with some profits. I'm just trying to do a little nibble to the downside because I think that there's still another wave lower before it finds some support and bottoms. Okay, so that's where I'm at. Very transparent with the trades that I have on today, just like as always, so it doesn't mean you need to do it, and especially because you're going to enter them already and you don't have the risk play. Read my book. It'll teach you how to trade the signals that I follow, especially on the daily, weekly, and monthly basis. So, and if you don't remember what the name of that book is, it's High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And don't forget to subscribe to Forex Trading Unlocked on YouTube and Twitch. Thank you for viewing us today. And if you don't mind, please like and share our videos as well. So thank you guys for spending some time with us today. We look forward to seeing you guys again soon.